Good morning, everyone. Welcome to the Accelerated 5-minute daily training. So today, I figure we will pick up where we left off on Friday. Big kind of things happening over the weekend. Crypto just absolutely getting annihilated. Ethereum down from $1,800 down to $1,200. Bitcoin down in the 23,000 range. So things quickly accelerating to the downside there as the overall markets continue to move to the downside. So, all right, well, this is our weekly chart of the NASDAQ that we've been talking about, discussing, had our little trade setup going on that did not work out to the upside. And so now what we're seeing full-on momentum to the downside. Last week's CPI number came out quite bad. That continued to confirm that inflation is alive and well, which we anticipated. And so, yeah, that's going to be the headline for a while. I mean, we already knew that is what it is, but the way that the news cycle essentially, incites panic and all that stuff, that's just the way that it works out. So that's what's driving the markets right now. That will subside as we get, as we move on, within the next week or two. And then we'll just have to see how far this momentum will carry us. But in the meantime, it looks like, I think by the open, based on the futures, it looks like that we have already reached new lows, and the downtrend is fully resumed at that point. So let's go ahead. So here, what I kind of wanted to discuss quickly is we're going to go over some support and resistance levels. Support, again, being kind of a floor, resistance being a ceiling. So now that we're moving lower, we're focused on support levels. We're focused on previous price levels that were essentially higher lows in the market and from prior, and areas of congestion, and where essentially larger amounts of trading volume and changing of hands happen. So we look for those areas as well. They give us a good kind of indication. They're really good for setting profit targets, because we know that there's prices are drawn as value, prices pushed towards and away from value. Right now we're coming back into value, right, as the market goes lower and lower. And so we'll go ahead and take a look at a couple of levels. These are our up and coming kind of levels here. So I can move this screen a little bit. There we go. If I can move that down there, that'd be good, so we can see. I'm going to move it up here so we can see these prices. All right, so so we got this guy here. Being our next level of support to the downside. And then we've also got this one here. And we'll throw on this one here. Okay, so we've got essentially 11,000. What's that? 10,700 and 10,000. So we can start to anticipate what's going to happen as this continues to break down, and so we'll go through the trade in more detail. Or not necessarily the trade, but just how things are progressing. So switch back over to our daily chart, and so we're seeing that after momentum had essentially accelerated to the downside here, broke up, and we had essentially established kind of like a pretend trade where we assumed that momentum would head higher, kind of a bear market rally here that it really didn't gain much steam to the upside at all, which in my opinion shows quite a bit of weakness. You have the news cycles, and the news comes out and it spooks the markets, but it can also be a catalyst for the next significant move in the trend. So this, for me, if this persists, if we don't get a bounce here at the lows here and it doesn't bounce back higher, then this was just the catalyst for the next leg of the bear market that we're in. So, yeah, so we also, right, so we're talking about momentum. Momentum was broken to the upside here, you know. So this is kind of like our trend line. Okay, and through consolidation, you can either have a break of the trend line, or you can have the consolidation. In my opinion, they both kind of they both represent the same thing, which is a breaking of momentum. Now, when it breaks the trend line with consolidation, then again, it can go either way as compared to a trend line when it's broken. Usually that represents, you know, a reversal of momentum in the other direction. So, but here it essentially did the same thing as it would if it would have just have broken that consolidate, or broken this trend line here, consolidated through here, broke lower. So now the momentum is to the downside. We have a little bit of, like I said, congestion here, which in normal circumstances could potentially support the market, but based on what's happening right now, it's probably just going to break through and crush through that. So anyways, yeah, so that being said, and we can't really see them on the daily chart, so we'll bump back out to the weekly. And so now, once these prices down here are broken, we are essentially looking for the market to be sucked back into these levels down here, 11,000, 10.7, and 10.2 are where I am looking. And we can also look here, and we know that the previous high for the market was 17,000-ish. So break that down 3 times. That's a little more than, what's that, 5,700 or so. That puts us at, I think the 11,000 mark will be right at the 30% correction. So it's not uncommon if we're going through a full market crash. 30% is, I think we hit a 30% drop in the COVID when that all happened, and we saw what happened after that, right? A bit different things going on here. Negative expectations for the future. But if you're in the market long term, you know, we're moving into value. These are better prices than we've had since, well, I can't see a stupid ad here. We're moving into prices that we haven't seen since, you know, since December of 2020, right? So for us younger guys, this is a great thing. We want to be buying and averaging into these prices. And yeah, so that's more investing than the trading stuff. But that's the way that I'm looking at it, since my head is geared long term as well. So, but anyways, yep, looking at these support levels here, and then beyond that, we're looking at congestion beyond this and back down here, which would be a huge drop. And essentially, as long as this continues to go down, the chances of recession are heightened. And there's lots of different things that play into that as well. So ideally, if we wanted things to keep trucking along, we kind of come down into this kind of congestion area here. We'd get a solid bounce, and we'd move out of there and head towards new highs. So that's yet to be seen how all this is going to play out. But we can talk about that more another day. So have a good day and happy trading.